So you think of IT and immediately you would think about the outperformance that we've seen in IT stocks in the face of weak results. The question is, what next? Where does it go from here? And I'm here to present the bull versus bear argument on IT. So let me start with Morgan Stanley, which has raised the target price across all IT companies. The biggest price increase has been on Cyient, where the target price has been upped by nearly 29%, and it's followed by LTTS, L&T Technology Services, where the target price is up by 25%. On Wipro and Emphasis, the increase in target price is a bit more modest, 11 to 12%. So basically, between 11 and 29% is the increase in target price. The rationale given by Morgan Stanley is one, double-digit revenue growth in FY25, which according to them is higher than consensus, and secondly, they expect EBIT margins to improve starting Q1 FY25. But there is always a but, right? You've got Nirmal Bang on the other hand, which has cut its FY25 estimates. They believe growth will be slower for longer and would recommend selling into the FOMO rally that we've seen on IT. Their argument is that market is taking the view that the worst is over and revenue and earnings will start accelerating sharply in FY25, driven by a stronger US economy. But Nirmal Bang is taking the macro call that US recession has been delayed, but they do believe it will happen in 2024. In fact, they're expecting a mid-single-digit revenue growth for IT companies in FY25, which is a contrast to Morgan Stanley because Morgan Stanley is expecting a double-digit revenue growth. Nirmal Bang believes revenues will pick up only in FY26. They're also not in the camp about margins improving in FY25 as Morgan expects, because Nirmal Bang says the big deals that the IT companies have won, they've been fiercely there's been fierce competition in them and they're priced to win. And just to underscore how divergent their views are on stocks, these are the target prices. As you can see, they're on the other end of the spectrum. On Infi, Morgan Stanley has a 10% upside, but Nirmal Bang sees a 15% downside. On HCL Tech, that's another one. Morgan sees a 15% upside, Nirmal Bang sees an 18% downside, and particularly it's Tech Mahindra, which has seen a solid 25-26% rally year to date. The opinion is very divided. Morgan today has downgraded Tech Mahindra to an underweight from an equal weight because they say the stock has seen a strong rally despite the earnings cut, which makes the valuations expensive. They have low confidence on growth revival in their telecom vertical, and any potential turnaround due to the management change, according to them, has been priced in. But you've got a Nirmal Bang, which has upgraded Tech Mahindra to an accumulate. So they're saying go out and buy. And that's because the margin expansion in FY26 may surprise on the upside under the new management because it's starting off on a low base. So that's what they're expecting on Tech Mahindra.